Home prices are up almost 20% over last year at this time. The question is, can it hold? That's what we're looking at today in the weekly Altos Research Market Data Review. Each week, Altos tracks every home for sale in the country, all the pricing and changes in pricing, all the supply and demand, and we bubble up those analytics so that you can see the trends in the US housing market far before it becomes available in the traditional media channels. This week, Thursday, May 6th, we are hosting our monthly hour-long webinar where we get to dive deeper into the data. This month, we're going to be looking at the bubble question. Everywhere you look, there's talk of housing bubble. Whether or not this market pops is a big, important question, not just for home buyers and sellers, but really for everyone in the country. So this Thursday, we're going to investigate that fear and see what the data is actually telling us. We'll spend some time also on how agents and brokers, any real estate professional, can discuss the conditions with buyers and sellers. There is a link to register for the May 6th webinar in the description below, so please join us. Median home price in the US this week is up to $389,900. As is normal for May and April and May, this is peak buying season. So home prices climb very steadily each week before the market normally peaks in June. The unusual phenomenon last year, it was that demand didn't back off at all in the third quarter like it normally does. So prices stayed elevated all year long. This year looks much more likely to have normal seasonality as the school and work schedules slowly get back to normal. More people in the office and doing the school schedules mean there are far fewer who are likely to make the impromptu mid-year moves. The median price of the newly listed cohort, that's the gray-green line here, it's one of the places where we see that normal seasonality returning. New listings this week are priced at $360,000. That's down $4,900 from last week. The week-to-week bounces are what we'd expect right now. The new listings are hitting the market now for June, so that you can see that each year the peak of the green line happens in May before the June, July starts to back off. So last year was the exception of this curve where the green line kept going up through late summer. When you look at the annualized price appreciation number, home prices are up over 18% from last year at this time. That's nuts. But if you look closely, you'll see that we're comparing now to the absolute low point of last year at this time. So last year, in the first week of May, home prices were down 1.5% over 2019. So assuming that the leading indicators, the new listings data holds up, what you'll see is that home prices in 2021 turned horizontal in June. And while the prices of 2020 kept rising. So as we go into the third and fourth quarter of this year, watch the annualized price increases. That'll compress, so it won't be 18% anymore. It'll finish 2021 in the mid-low teens as the normal seasonality this year meets the unseasonal pattern of last year. So remember, the market's still crazy hot. Home prices are way up. It's just at that compression. So right now, we have this distortion comparing over the absolute level of the beginning of the lockdown last year. Inventory this week is roughly flat again, not really falling, not climbing substantially, but ticked down just a hair to a new record low. So only 307,000 unsold single family homes on the market right now. Normally this time of year, we'd have inventory building each week. Last year, this is where we were totally shocked as inventory started declining at this mind-boggling pace each week. We're not going to get a flood of inventory, but hopefully we are going to get a little seasonal increase as we move through May. That's what we're looking for. The immediate sales number that we've been tracking compressed a little bit this week. We call that immediate sales are homes that get listed. They take offers in hours or days and then essentially go into contract immediately. Hot markets always have some immediate sales, but right now they are dominating the transactions everywhere in the country. So at 25,400 immediate sales, that's a tad fewer than last week at this time. Interest rates are down again this week. So buyers have the affordable payments, even when there are bidding wars that happen on these immediate sales. So it's hard to imagine that this demand slows much until we see substantial changes in mortgage rates. But that's all the data for this week. As always, subscribe to the YouTube channel so you don't miss these videos. But as I mentioned, if you're a real estate professional and you work with buyers and sellers right now, you know this question of the bubble is on their mind. Is it going to pop? Is this just a hot market? What's the difference between those anyway? Like, that's what we're going to discuss on Thursday, May 6th at 10 a.m. Pacific. The link to register for that webinar is in the description below, so definitely join us for that. All right, everyone, more next week.